Greetings from the FxPrimus webinar, the safest place to trade. We want to provide all of our clients with the knowledge they need to trade profitably. Enjoy.
Okay. So let's get started. I think first thing here is we to update you guys, right? I think just as the session starts, we do have the CPI coming out. Okay. If I kind of refresh that, you can see it's basically 8:30 is done. And we do have a slightly negative side on the CPI data. Negative means lower than expectation. But that's actually a pretty good sign in a way where you're gonna ease off some pressure for the Fed in hiking. Okay, so CPI or inflation itself has in fact came down quite a bit compared to like what happened last year. It went as high as 9%, and then right now the latest data here on CPI is 4%. Okay, so it actually dropped quite significantly for inflation. That may start to build in a little bit more into Thursday midnight Fed funds rate, because as inflation ease off, then there's a good chance the Fed may not need to hike it another time. And you can see over here right now, the expectation is basically to maintain it at 5.25. Okay. So eventually, at some point in time, the Fed would likely gonna cut rates to kind of tackle potential recession that's upcoming. The thing here is, are we gonna see the first cut maybe in September, or are we gonna see the first cut in December or maybe early next year? Okay, so that would also have what we call a fundamental shift in the currency market. Okay, because if the Fed eventually cut rates, whereas some other currencies are still potentially hiking, then that's where we can see the dollar's weakening against the other currencies that we're going to likely talk about. Okay, so that's the updated data that just came in. Tomorrow we do have a little bit in the US and the UK side, but I don't think that's going to be super important, because after that we have the Fed funds rate that's going to be more important. And then on Thursday, if you're looking at Asia market, we do have the Australia unemployment rate, or the labor market. Okay, Australia labor market is not like gonna be like super volatile, or the market is not likely gonna move much for that particular news. But in the evening, then we have the ECB. Okay, so again, if you're trading related to euro, just take note of it. Right now, the market is expecting another hike from ECB. I don't think that's gonna be any surprise. I think the ECB is likely gonna hike it anyway. Right? And then on Friday, we have the Bank of Japan, right? So Bank of Japan is a bit more difficult to trade because you can see the time here is always tentative, right? They don't really have like a fixed time that it's going to release it. But over here, you can see basically BOJ is not going to do anything in its policy, right? This is the expectation. I don't think the Bank of Japan is going to do anything anyway, right? So I don't think that's going to be much of a surprise. Okay. So I think this week, there are quite a bit of event that if you're trading, you need to just take note of potential volatility coming from the Fed, from ECB, as well as BOJ. Okay, so that's an important aspect to give you an overview of some of the things you want to keep track and take note of, especially if you're trading within the week. Right. So with that said, let's jump into some of the technical analysis over here. I'll start off with the DXY, right, which is basically the dollar index. Do take note that this chart that you're seeing here on DXY is delayed by a little bit. Okay, so of course just now the news came out. You probably see the price did not really move much, right? But the dollar index chart here is actually delayed a little bit. Okay, you can see euro is moving, pound did move a little bit, right, with the news release. Okay, so DXY actually should come down a little bit once this is updated. Okay, but overall, going into this week and potentially into next week, as long as this structure maintains, right? So basically, as long as price comes down and see some form of a support around this zone, we can expect the dollar to actually strengthen a little bit more. Right? Maybe for the one last push to the upside before the Fed starts to talk about cutting rates, and then we'll likely see a drop from there from a longer term perspective. Okay, so I think short to mid term, we're likely going to see the dollar strengthen, okay, and then after which, then we'll likely see the dollar weaken. Okay, So if you're looking at dollar index chart, the focus is to keep an eye around 102.80 to 103. Ideally, price should face some support around that zone. Okay. Now we can't really trade the dollar index directly, okay, but the dollar index kind of give you an overview in terms of some of the major pairs. How do you want to approach them? Okay, because if the dollar index is suggesting upside, then if you're looking at, for example, euro dollar, there's a higher chance it will come down, right? If you're looking at maybe the dollar CAD, right, there's a higher chance maybe dollar CAD will strengthen coming from the dollar point of view. Okay, so that's euro right now. Okay, euro dollar is essentially testing. Give it a while my drawings pop up. Okay, is it popping? Okay, so euro dollar essentially, if you take a look at this, we did have the price pop into this area. Okay, so what I'm looking at from an Elliott wave point of view is essentially from this top here, we have a in terms of yellow color label, right? So if you focus on the yellow one, we essentially have a 1, 2, 3, and this may be wave 4. And we're likely gonna see one more drop to the downside. Okay, so this drop here potentially can come from dollar strength or euro weakness, which we have the Fed on Wednesday midnight, right, as well as ECB coming in on Thursday as well. So definitely an interesting pair to keep an eye on for euro dollar. Okay, so right now if you take a look at it, we kind of tested that area, okay, just as the CPI data release. If you're interested, I think, what you can do is you may want to look into maybe the hourly. Okay, if we can get the price to close, okay, maybe, with a strong little rejection, right now we're observing a little bit on this. If the price is able to close maybe, back down towards near where it's open, then we can see obviously a rejection. You may then use, of course, whatever strategy you have to look for a sell. Alternatively, what you can do is you can set in a breakout entry at the bottom here, where if price really decides to break to the downside below this low, you can get involved in the sell trade. Okay, and then of course your stops, your invalidation can place just above that recent high. Okay, so euro dollar is definitely I would say a potential trade idea right now. Okay, going into the Fed's FOMC as well as ECB on Thursday. Okay, but of course, having said all this, you need to take note of your personal risk management as well. Okay, it doesn't mean that price will just keep falling. There's also a good chance where this may start to kind of slow down a little bit, retest a bit of this area before that drop. Okay, that's also a possibility. Okay, but wherever it is, I think euro dollar is definitely presenting a decent sell opportunity in the short to mid-term trade ideas. Okay, how far can you look for targets on the euro dollar? Okay, if I were to add in a little bit more label, right? So basically, this would be a WXY, right? It's a three-wave correction. Okay, how far can we target in terms of the take profit level? For Elliott wave over here, we use a lot of fibs. Okay, so one way we can do is, of course, we can take the inverse extension of it, okay, and put it somewhere around 127. So that will put you somewhere around 1.0580. Okay, what we can also do is we can actually take reference from the starting high all the way to wave 3, and then map it to the end of wave 4. And the fib over here potentially we can look at is, okay, trade 2. As well as the 618 extension, right? So I'll use the green color one. Now trade 2 is just at this bottom, right? So I'll just take away, and of course you can look at this bottom as a mini support for your potential take profit as well. If not, then you'll be aiming for the bottom over here. Okay, somewhere around 1.0580 to 1.0540, right? So that would be the potential setup you can look for. Okay, so the projection over here is potentially we'll be looking at sell trade opportunity, right? So that's one thing to note for euro dollar. Okay, if you look at pound dollar right now, it kind of came back and retest this high, right? So for me right now, I would say if you are looking at pound dollar, and we're going to just update this analysis right now, I would say we want to shift it to a neutral point of view, simply because we are seeing a very strong little bounce back up. Okay, kind of a little bit of what we call a V-shaped formation. Okay, so on the 1 hour, it may be a little bit clearer, right? So you can see that V shape. Now, what I would always suggest is if you start to see the market put in a V shape, okay, you just want to be a little bit patient and not jump into any conclusion yet. Case in point, you can always see V shapes happening in the market. Okay, this is what we call a V shape. Okay, basically you get a very strong rejection. Those are V shapes, right? This one here as well, you can see is a V shape. Okay, obviously this is a V shape, right? So, the idea is when we see a V shape, usually I'll put myself in the neutral point of view because I want to observe after this move, how would the market develop? Now on a 4 hour time frame for pound dollar, okay, I'm actually a little bit more on the bearish. I'm a little bit more on the bearish side of things. Okay, but this itself, this strong little push itself, doesn't give me a sell reason, right? There's no reason to be selling it at this top. Okay. So what I will be looking at is, can we get a rejection back down first, right? So any form of kind of price action rejection would be a good indication. Okay, if I put in a bit of a Fibonacci extension over here, okay, we basically came close to the 100% and this zone. Okay, so from Fibonacci ratio extension point of view, okay, the market tends to react around that 100% extension to 123.6, right? So this area is where the market tends to react. So we'll probably want to give it a bit more time and see, if this forms kind of a rejection pattern, a price action that looks something like this, then that is a higher possibility of a rejection. Okay, this little pattern is what we call a crawl. Okay, it looks kind of similar to something like this. Okay, of course in the opposite direction, right? This is coming down very slow. This is huge, right? This is huge. So if you imagine this going up slow and it's a smaller pattern, okay, that's what we call a crawl. Usually a crawl indicates a potential reversal. Okay, so that's something to note for GBP USD. Okay, the setup may come to us, I would say, closer towards Thursday and Friday, which means that it will be a post Fed funds rate kind of potential trade. Okay, post meaning you wait for the news to come out, you observe how prices react from the news, and then from there you make a trading decision, right? So you realize that some trade ideas will be pre-released, right? Basically you are riding on a potential release and the potential volatility of the news. Some ideas you want to be a little bit patient and wait for the news to release, and after that you come back and look at it again. Okay, so GBP USD would probably be a trade idea that I'll put it as post Fed funds rate. Okay, so you wait for the dollar to do its things, and then you come back and take a look. Can we get a sell trade? Now, can GBP USD keep rising from here on? I think the chances of it going higher may not be very kind of like high probability. Even if it is, you're potentially facing some kind of resistance at the previous top, and then of course we do have these FIPS areas to clear off first. Okay, so for me, I'm primarily looking at downside. Okay, the idea is of course you want to just wait for a setup to get involved in the sell. Okay, and then we have the Aussie. Okay, so Aussie is basically still climbing quite impulsively. Okay, so basically this is what we call an impulse move. So initially we were looking at short term, can we get a deeper retracement, and consider to take a sell trade on that. I think overall, okay, we may not be entirely bearish going forward, but we are still expecting that pullback. Okay, what we mean by a pullback is generally the market will not go in one direction all the time. Okay, so it tends to, for example, in this case, it drops, it pulls back, it drops, right? Okay, this one here, it goes up, it comes back down, right? It goes up, it comes back down. So the market tends to move in waves, right? Ups and down, right? Even in this case here, you can see it drops, it pulls back, it drops, it pulls back, it drops, it pulls back. So right now, what we're observing on Aussie dollar over here, okay, is that the market has actually moved off quite significantly, right, without any of a kind of obvious pullback and retracement. So usually that's what we're gonna expect. Okay, so the philosophy and the principle over here is some traders, especially on short term, may consider to trade this pullback. Okay, however, if you're more of like a longer term swing style trader, okay, you would probably not be interested in this pullback, but you'll be waiting for this pullback to maybe take a buy trade, okay, because the trend here is obviously upside. Okay, now take note, directional bias is not equivalent to trend. Directional bias is basically a particular direction that I'm personally focusing on. Okay, so it's now bearish because we're expecting this drop. Okay, so for me, is there any setup? Right now, we don't really have it. But if you can maybe look into maybe tomorrow or after the FOMC, okay, if you can get a kind of rejection down, following that a tiny bit of a consolidation or a pullback, okay, this would be a setup to start considering the sell as a retracement. Okay, short-term play. Okay, so I think this one here you probably want to wait after, again, quite similar to pound dollar, you want to wait after the FOMC release. Okay, so that's on Aussie dollar side of things. Okay, how far can it potentially pull back? Usually we use FIPS, right? So we're gonna take from swing low to swing high. Okay, but of course right now the market is still developing, right? So we will probably need to adjust this if it goes a little bit higher. But if let's say it doesn't, and this is the high right now, and it starts to come down, then we will look out for around 15618 as a pullback. Alright, so that's on the Aussie side of things. Now if you look at dollar CAD, okay, we're basically bullish on this, which means again we're looking at potential buy. The reason is actually quite similar to Aussie, right? Just the opposite side. So we saw this market comes down. Okay, in terms of wave, you can see the white color label 1, 2, 3, 4, and 5. We may have completed the 5 wave and expecting kind of a bounce back up as a retracement. Okay, and of course, on top of that, what we have right now is the market is basically testing the bottom of this channel, right? Okay, so we do have a 5 wave move down, which indicates a potential bounce. We have the bottom of the channel, which again might act as some form of a support. And of course, if you're familiar with RSI and divergence, okay, we're building that on this particular time frame as well, right? The market is coming down, but RSI is going higher. So divergence again often signifies a potential reversal coming. Okay. So again, this one here is something you can look into. Quite similar to Aussie dollar. You may want to wait until post FOMC, right? Because again, if there's an important news coming on Wednesday midnight, right, generally the market are gonna be quiet, building into it as well, right? We're basically waiting for the news to come out and then we act on it. Okay, so this one here, what you can do is same thing, right? You may look into the hourly, see if you can get a bounce and a retracement. Okay, and then that would be the setup to look into. Okay, let me show you an example of how it looks like. Okay, something like this. Okay, something like this, right? A push up, a retracement, you'll be expecting upside, right? Or something like this, a push up, a retracement, and then you expect the upside. Okay, so that's what we call the setup that you want to look out for, developing around this zone. Okay, so that's what I illustrated, right? Wait for this impulse, wait for the pullback, and then you look at the trade. Okay, so that's on the dollar CAD side of things. And next we have the dollar yen. Okay, dollar yen here, potentially we are looking at a triangle formation. Okay, a contracting one. Okay, you can see over here. So in this case, if you're looking at a potential triangle, it may be completing soon. Okay, as a ABCDE, right? So you can see here, A, B, come down C, D, and then right now it's potentially completing wave E. Now, if this is gonna be a kind of contracting triangle, we should see some support at the bottom of this, and we're expecting one more pushback up. Okay. Now, what it can develop into is also a simple pullback, right? 1, 2, and potentially 3, breaking the structure of a triangle, breaking this low before the bounce. Okay. So in terms of dollar yen, there are quite a few different possibilities of how it can potentially turn into in terms of patterns. And that's the reason why we're neutral right now. Okay, we basically are not clear and we just want to wait. Okay. Now, one thing you want to take note of is you realize that the RSI is also doing a consolidation. Right. So most of the time, when we see a triangle pattern, we can use the RSI as a form of confirmation, right? If this is consolidating, this should be consolidating as well. That gives us a higher probability that this, in fact, is a triangle. Okay. So with that said, okay, what you can look into is potentially trading into FOMC. You'll be looking at dollar strength. Okay. So I think the general kind of context and direction over here is we're likely looking at dollar strength. Okay. Across broad, right? We're looking at dollar strength. Okay. So that's that's USD JPY. Now then, we have gold here as well. Okay, I think a lot of people are interested in gold. Okay, so for me on gold, okay, I think short term here, we may see a little bit of a bounce back around this area to kind of complete that channel, right? And after which, there's a good chance this may come back down. Okay, so if you're into gold trading, if you're doing short term, you want to focus on the buy. If you're doing on a swing trade, maybe you want to consider waiting for price to come up first to see if you can get a sell. Right. So if you're looking at the buy, then going down to the hourly, okay, you can see quite a bit of a spikes recently, quite kind of consolidated, and then we have a lot of spike. So this one here, you can put in an inner channel. Okay, you can put in an inner channel over here. What you can look out for in terms of trade setups on hourly is maybe, okay, this is a rejection, right? This is a rejection. So what you want to do is see if you can get a kind of pullback, okay, on the hourly or even maybe shorter time frame. If you can see that, then that may be a setup for you, okay, to take it to the upside. But of course, you may have your own strategy to get involved in it, right? You may look into maybe 30 minutes, 15 minutes, wait for kind of like maybe a bullish candle or so, okay? But that's definitely short term, right? Short term looking at upside. Target here potentially towards 1990 to 2000. Alright, so gold short run, that will be the bias. Okay, but you can see here it's bearish because I'm not interested in this short run. I'll be more interested is if market comes back here, can we look for a sell? Okay, so that's my view on gold. Okay, now if you're trading indices like S&P, I think overall we're in a bullish trend, that's for sure, right? The market kind of moving higher. We can potentially start to break, move back towards the previous high and potentially breaking new high going into next year, right? So if you're looking at maybe long-term investment, I think generally the equities market is giving us some good opportunity. Okay, so even if you are trading, right, I think you want to focus on upside. Okay. So right now we're looking at it potentially as a wave 3 completing soon, and we'll be expecting kind of a bit of a pullback, and then we'll look for a buy. So if you do not have any buy trade on S&P, my suggestion is you may want to just be a little bit patient and see if you can get a pullback before getting involved in it. Okay. So it's still basically moving, so it's a little bit too early to kind of adjust this, because if this keeps going, we just adjust it accordingly, right? But the fib areas that we're looking at for wave 4 is somewhere around 236 and 382. Okay, so that's the area that we expect the market to come back down. This zone becomes a good buy area for you to look for upside. Okay, so if you're into index trading, okay, I think that would be a good opportunity to keep an eye on. Okay, I'll jump over to Bitcoin, okay, on crypto market for those of you interested. Now, over the weekend, we have a news that saw, Binance being sued, and quite a number of altcoins actually collapse over the weekend, right? But I think right now it bounced up quite significantly already. Kind of what we call a sentiment effect, right? Suddenly there's a fear and people are basically selling it. Okay, and when that sentiment is gone, okay, the market will probably bounce back up. So with that said, if you then look at the technical analysis of Bitcoin, okay, which is one of the biggest crypto coins already, I think the general market over here is actually suggesting a little bit more downside. Okay, so if you are maybe trading in crypto, right, you may want to consider sell opportunity on Bitcoin. Based on the analysis here, we're looking at potential coming back down towards $24,200 level. Okay, so it may not, necessarily reach there, but I think short term we may see a little bit more drop before the bigger move to the upside, right? So if you are trading it short term, you may want to consider selling. If you are waiting to get involved in it, as a buy and hold strategy, then you may want to just be a little bit patient and wait for price to drop a little bit more so that you can get in at a much lower price. Okay. So that's my Bitcoin analysis. If you take a look at maybe Ethereum, right? Okay, I think it's likely going to be quite similar because these two pair, generally they are like, quote unquote, the blue chip of crypto, right? So over here, Ethereum, we're also expecting a little bit of a drop before the bigger move. Okay, so same thing here. If you're looking at Bitcoin, Ethereum, any kind of corrective pullback will give you that sell opportunity. Okay, so for the short run, crypto side of things, especially on Bitcoin, Ethereum, you can expect a bit of downside. Okay, okay, good. Matthew here says, can we repeat on gold? Sure, right? So let's take a look at gold here. Now gold here in terms of the I would say short to mid term. Okay, my definition of short to mid term is probably around like starting today all the way until maybe end of the week to next week, early next week, right? So it's about like 5 trading days. Okay, there's a good chance gold would probably strengthen a little bit. Okay, it may come from dollar weakness. Okay, so ideally we're looking at a little bit of a push up. Okay. So if you're looking at gold on a shorter term perspective, you can consider buy setups, right? Of course, how you're going to get involved in it, you may have slightly different criteria to enter a trade. But for me, of course, I can share this a couple of times as well. Okay, primarily I want to see a very clear, fast push to the upside followed by correction. This would be my setup to get involved in the buy, right? So of course, right now we don't have anything that's very clear on gold. Okay. I mean, if you want to force something in, we still have this setup here, right? Impulse correction. You can maybe consider a breakout and things like that. But every strategy is slightly different, right? I mean, you may have your own setup, in terms of like, okay, we have this great rejection candle. If this 1 hour candle, closes off in a bullish environment, you may then open at the next price, and look for buy. That's also a potential strategy that you can consider, right? So direction wise and in terms of target wise, that's what I can share with you more clearly. Okay, short term upside with a target here, but how you're going to get involved in it, where you're going to put your stop, that goes back down to the strategy, okay, that you're using. Okay, I also hope that's clear for Matthew. Okay, Ibrahim asks, possible to give insights on crude oil. Okay. So this is my view on crude oil. Recently, it kind of get a bounce, right? I mean, just today, we didn't really get the market to tag that 100%, but it kind of came quite close. And we are seeing a little bit of a reaction over here. Okay. So what I would do is I would assume that it has tagged, right? So again, it's not always going to be like nicely 100% touching it, right? But it came very, very close. Okay. And right now it's bouncing. So from a 4-hour time frame, right, we can see this as a potential 1, 2, 3, and as long as the market, okay, let me put this in. As long as the market stays above this level, okay, we are gonna expect more upside from here on, okay. And the pattern is very similar and very simple. This is a 3-wave move, okay? And we're expecting this as a 1, 2, 3. Okay, so the target you can see, okay, for crude oil, we're looking at around $77.70, which is a 100% mark. Okay, so what that basically means is if you take this low to this high, and you duplicate this move here, and you kind of put it at this environment, we get kind of equal length, right? 1:1. Okay, so most of the time we see that reaction, right? So same thing here, right? You can see from this high to this low, if you kind of duplicate that and put this across, we're gonna get equal length, right? So crude oil here, I think in the even from short-term, mid-term to slightly maybe on the longer-term perspective, we're bullish on crude oil. And if you're interested, what you can do is go down to the hourly chart and see if you can get a decent pullback, right? So a pullback here, you can use a little bit of FIPS if you're familiar with it. Swing high, swing low, maybe around 5618 will be the area to look out for a buy. You can also consider price action in terms of like chart pattern. You want to wait for a corrective pullback, right? So something kind of similar to this right here, you can see, right? So kind of pullback. Okay, so something like this, right? So that's what I meant by pullback. So if you can get that, then of course that will be a decent buy opportunity for you. And in terms of invalidation and stop loss, you can definitely put it at the bottom here. Okay, yeah, so that's my view on crude oil, right? So I think upside. Okay, your target is gonna be, your short-term target is gonna be $77. Okay, but I think crude oil here eventually would have quite a big upside, right? Because it has fallen quite a bit. Okay, if this can take off, I mean, price can take away that $77 resistance, then we can see more upside. But of course, oil prices are quite closely tied to inflation, right? Because oil is one of the energy prices. Okay, if oil prices goes up, there's a good chance inflation will go up as well. Okay, so the reason why we have seen inflation drop quite a bit is because since the peak, right, last year around June, for crude oil, which is around $125, we have seen oil prices drop, quite significantly, right? Almost close to like 40-50%. Okay. And that's where inflation started to drop as well, right? You can see inflation from 9+%, right now it's 4%. Okay. So energy prices, right, especially on oil prices, kind of have a very close relationship with inflation. Okay. So that's something to note as well, right? So if let's say in the future, if there's another inflationary concern, okay, you can always look forward to like energy prices. Okay, if energy prices start to fall, there's a good chance inflation pressure will start to ease. Okay, if energy prices are very high, inflation pressure are likely going to be high as well. All right. Yeah. So that's this one here on crude oil. Okay. Any other instruments that you guys are looking into? Okay, let me just scan through very quickly some of these charts here. Okay, maybe we'll talk a little bit about GBP JPY. Okay, so this may give you a potential trade soon as well. Okay, but GBP JPY is a little bit on the counter trend potential setup, right? So the principle is quite similar. The idea is we have seen quite a huge move. Okay, and at one point in time, the market will do a little bit of a retracement, right? You may not do an entire reversal, but we always expect some form of a deeper retracement. Okay, so right now, if you take a look and I zoom back in a little bit, right? Just now we did get a spike up, but we get back a very strong little rejection. Okay, so if I go down to the hourly, you can see that pin, right? Okay, so basically this is what we call a potential double top formation. If this is a potential double top, then this naturally becomes the neckline, right? And I don't personally just trade off the double top, but if you pull out your RSI, we also want to see some kind of a divergence, right? So you can see as price keeps going up, we kind of see a little bit of a divergence built in, right? So I always like to combine divergence with double top or double bottom kind of structure. Okay, so we have a double top on the hourly right now, and of course, if the market comes back down and break this mini low around 174.35, okay, then of course we can then start to expect maybe a little bit more of a downside. Okay, so the area of interest for potential downside target, again, I wouldn't want to just put a one line, okay, but I think the area potentially is going to be somewhere around this zone. Okay, it's a pretty wide zone, okay, but for me, if you want to take a horizontal level, probably it's going to be somewhere around 171.2 or 171 area. Okay, so that's something to note as well if you're interested in pound yen. Okay, but of course you may want to consider this as a potential kind of reversal setup, okay, because we have seen prices keep going up, right? So the trend is quite obvious right now, but any sell here is potentially a reversal kind of setup. Okay, so that's one thing to note. Okay, I think pound yen may be something you can keep an eye on. The trade may come to you maybe within this week. We don't really have much of a pound news, but we do have Bank of Japan on Friday, right? So that may give us some volatility on it as well. Okay. Okay, Mia here asks, can share about Dow Jones, DJI. Okay. Okay, this is my view on Dow Jones. Recently, it kind of broke this piece here, right? So I think equities in general, right? We can say that we're bullish on it, right? I think overall, in terms of like US equities, whether it's the S&P, Nasdaq, or Dow Jones, we're generally up, right? I mean, for Nasdaq, it's a little bit on the tech side of things. Recent AI trend has pushed a lot of the AI related, chips, semiconductor related companies, Nvidia in particular, to the upside, right? And that kind of dragged the entire Nasdaq up too. Okay, so Dow Jones here is also following suit. S&P is also following suit, right? So I think overall the equities market, we are all looking at upside. Okay, so if I were to put in a bit of a projection over here, okay, we may see the Dow Jones in this case here break this top. Okay, so anything that you're looking at is upside, but same thing here, right? I think after a strong little push, you may want to wait for a pullback first. Okay, maybe not to the 618, maybe it might not be so deep, maybe back towards that 50%. Okay, will give you a decent opportunity to get involved in the buy, right? Yeah, so that's something to note, right? So 1 hour is showing a little bit of a divergence, so you want to be a little bit careful. From a wave label perspective, we may have completed a 5-wave small structure here, right? Small 5. Okay, so what you can then expect is, of course, a 3-wave pullback and then a push up again, so that then this will become a bigger wave 1. This can be wave 2, and then we're looking at wave 3 over here to the upside. Okay, so in short, I think you just want to wait for a pullback, okay, before getting involved in any buy, because again, buying at the top may not be a very good idea. Okay, yeah, same thing, right? If you're looking at like Nasdaq, okay, that's the future, right? You can see upside, right? Basically, Nasdaq is the one that is more impulsive as compared to maybe Dow Jones or S&P, right? Because Nasdaq, a lot of the stocks within it is related to tech, and recently AI trend actually pushed companies really up, right? For example, Nvidia is just skyrocketing. Okay, that's your all-time high, right? For Nvidia, right? It broke that all-time high, especially with the recent earnings release, right? The whole AI thing is really giving Nvidia a lot of a push. Okay, I think not only Nvidia, right? Like companies like Microsoft, generally things that relate to AI, got that push. Okay, so if you're into like stocks, you want to start looking at some of these companies, okay, that deal with semiconductor, that deals with AI development. And of course, you need to also ensure that those companies are solid companies, right? So the fundamentals of those companies needs to make sense to you. Right. Yeah, you can also look at ETF if you're familiar with it. I think XLK is the tech sector, right? Technology ETF. You can see again, it's basically going upside, right? Today we do have a little bit of a gap. We may retest this recent high, face a little bit of resistance, and I think easily we can break out of that high. Okay. Yeah, so if you're into like equities, these are some of the things to note. Okay, one thing to also give you guys an idea is generally, okay, from a macro point of view, right? Generally, when the Fed cuts rate, okay, is actually beneficial for equities market in general, right? So right now, we may start to see the market price in a little bit, because we are talking about potentially interest rate peaking and then the discussion about cutting rates, okay? And we're gonna be entering into an environment that is beneficial for the stock market, okay? The reason is because when interest rate drops, okay, money becomes cheaper, right? Because when interest rate is low, if you want to borrow money, it's cheaper. So the term and the concept of when interest rate is low, money is cheaper. And when money is cheaper, then what general investors would be more willing to do is to actually borrow and reinvest, right? So basically, if you think of it as, if today is, the interest is cheap, the interest is low, I can literally take the money from the bank, put it into the equities market, and I can make good, decent returns from the equities market and still pay off the interest, right? And when that starts to happen, the demand for equities will go up, right? Because if a lot of people starts to put their money into the equities market, the demand for it goes in, right? There are more people buying. And when that, happens, it generally, again, push prices up. So there's this relationship, that you may want to take note. When interest rate environment starts to come down, generally, it's going to be beneficial for equities in general, right? I mean, not everything is going to go up, but in general, it's likely going to go higher. Okay, so you may want to start position yourself a little bit, right? I mean, earlier this year, late last year, there's still that concern about, are we gonna see another crash in equities and things like that? Now nobody really talks about it. I don't see any media start reporting, but generally we are in a bull market already. Okay, we're no longer in the bear market. We've transitioned back into a bull market. Okay, so yeah. Just something to note, okay? Especially for those of you who are more interested in longer term investment opportunities, right? Aside from maybe the shorter term kind of FX trading, okay? So you combine both, right? Like for me, I have shorter term trading, which I do a lot on the FX side of things, and then of course, I also deal with long term dividend investing, right? So you want to have diversification in a way like that as well, okay? So yeah, that's my perspective. Good. Cool. Any other questions that you guys have? Okay. So we are starting to see some kind of a rejection of euro dollar. Okay. I mean, if you're on a 4-hour. Just now we talked a little bit about it, right? If you're on a 4-hour, maybe if this, you may not wait until 4-hour candle close, right? Because, for this 4-hour candle close, it might be 11 p.m. if I'm not mistaken. What you can do, of course, you can wait for hourly. Okay, anyway, if you can get a big bearish candle, that may be a signal for you to get involved. Again, you must go back to your strategy, right? I mean, if you're not a candlestick person, don't because of what we say just today and then you go and sell it. Okay, you still need to follow back, your rules. Okay, you need to stick to your rules of your trading. Okay, but I think this is one of the, euro dollar for today's context, right, would be one of the I would say potential trades you can take action maybe within today. Okay, because some of the rest that we cover, you probably need to wait a little bit more. Maybe post FOMC, right? That's what we cover, okay? Yeah, but these are a few things, right? I think in terms of like even Kiwi dollar, you may get some. I mean, I don't trade Kiwi dollar actively, but I think Kiwi dollar has some nice little setups as well if you're into Kiwi dollar, right? So you can see we have that reaction around 100%. If I put in some labels over here, that will be naturally a WXY. Okay, we have the market, coming back up around the zone to retest this area. Okay, so you can see that, right? Very, very simple analysis. Of course, we combine a little of fits, we combine the understanding of a three-wave principle. Okay, we combine it with support and resistance. And what we have over here on the bigger scheme of things, of course, this is a big three-wave move as well. Okay, and what you can see over here is, just now I mentioned as well, every time the market comes down, we expect kind of pullback, right? So you can see this actually came down, especially this leg, right? It came down quite significantly, so we always then would expect a significant pullback. Okay, I mean, in the FX market, generally that's what it's gonna do. Okay, so you can see here it went up quite strong, it came down quite significantly, right? It is not 100% all the time, but it has a high probability it will likely do that. Okay, so as a trader, when you understand this in the FX market, right, one thing to note also is when the market is extended in a particular direction, for example, upside, right? If the market has extended quite significantly to the upside, you're going to be very careful in buying it at the top. Okay, it may not necessarily be a sell trade, but you just want to be careful in buying it, right? So case in point, I think like you take a look at Pound Aussie, right? Same thing here, you can see it went up, this is on the daily, right? So it went up quite significantly. Anywhere around the zone here, you want to be careful in buying because you can see it extended quite significant without any pullback. Okay, so around this zone is where we start to expect some kind of a significant pullback, and of course you can see Pound Aussie in the last 1 week or so did a very significant pullback. Okay, so that's generally the characteristic of the FX market. Okay, so if you understand this well enough, you can actually position yourself a little bit better. Okay, so for example, like coming back to Kiwi dollar, there is a good opportunity to look for a sell. Again, you may look at candlestick formation, etc. Right? And of course, you can see over here we have a divergence, right? I mean, on the hourly, I think it's super clear, right? And maybe not that clear. We do have a little bit. Okay, you might need to like really zoom in to see it. But again, you can see this peak is definitely higher than this peak, right? And price is obviously going up, right? So that's quite significant. So over here, if you're interested into Kiwi, I think if Euro may not give you a very nice setup, okay, then you just look at Kiwi dollar for potential sell, okay, with a target coming down towards like 6060. I think that's quite possible. Okay, as your target one, but of course over here we're expecting more downside, right? So if I can put this in, this will be on the daily scale. We can't have this little channel here, right? So I think price would potentially even retest the bottom of the channel. That's possible, right? But of course, the target wise, you may just take partial profits off around 6060 first, and then if you want to go for extended, of course you can always do that. Okay, so I think Kiwi dollar is another one to look out for. Okay. Kiwi yen as well. I'm not sure how many of you are familiar with some traditional chart patterns. Okay, we can't have a head and shoulder pattern developing here, right? Okay, yeah. Okay, and of course the neckline is quite obvious, is here. Okay, if you stretch it a little bit, you can see very nice little neckline, right? Not only support but previous resistance. Okay. Yeah, so this one here. Okay, so you may consider maybe selling here again based on your strategy and your rules, right? We have the 618 very nicely there. Very nice head and shoulder pattern as well. A traditional way to trade head and shoulder pattern is always wait for the break of the neckline, right? So people would say wait for this to come down, sell it here, and then look for downside. My idea is if you wait for this breakout, you are missing out this. Okay, so you may want to take a little bit risk, okay, to sell it at the right shoulder. Okay, and of course not just any right shoulder, but we have some confluence, right? You can see 618. If I'm gonna put this fit extension here, we'll probably have a very nice little 100% level area there. Okay, so this from Elliott wave perspective is a 3-wave completion, right? WXY. Okay, so we can't have that. And then of course we have this 618 pullback. You may want to wait a little bit for price action. Okay, but I think on the hourly, we have a divergence, right? Let me just go zoom this down, right? Hourly, we have a divergence. Okay, hourly, maybe not clear. You go down to the 30-minute, you have a double top on the 30-minute scale. You may consider maybe a sell here, right? A break of this 30-minute double top neckline, right? Instead of like trading the 4-hour neckline at the bottom, you can do something, trade the smaller time frame neckline so that you can capture this move. Right? So yeah, these are again some opportunities that you can keep an eye on, aside from those that we just mentioned just now.
Thanks for watching. Keep supporting us. Click like and follow for latest educational videos, or you can join our Telegram support group at Best Financial Educational Support. Have a good day and trade safely.